Hello everyone, I am Dr. D. Muniswamy, working as Assistant Professor of Economics. Today we are going to discuss about the components of the national income. National income is one of the most important topic in macroeconomics, particularly in macroeconomic policies. The national income is one of the main important topic. So here, what is national income? Okay, national income, nothing but here see there are two words here. One is nation and another is income. Nation, nothing but one country people. So income of one country people is called national income in general. But in economic terminology, particularly in macroeconomics, national income will be defined that it is for the particular period of time. So in particular period of time, the total net value of the goods and services produced by one country people is called national income. So in this particular definition, we have to understand the many things like so here the one of the most important point is in particular period of time. So what is one particular period of time in economic terminology? So here particular period of time, nothing but we are going to take the financial year. So in India, the financial year will consider from April 1st to March 31st every year. So this 12 months will be considered as a financial year. This is called one particular year. So in this particular year, the total value nothing but price of goods and services, that is called value of the goods and services. So here what type of the goods we are going to take the consideration? The final commodities we are going to take the consideration. What are the final commodities? The final commodities nothing but the goods which are ready to for consumption is known as the final commodities. So here whatever the goods are not ready for the consumption, like raw material, unfinished commodities, these commodities are not ready to for the consumption. So that's why this raw material, unfinished commodities, intermediate commodities, the goods which are not ready for the consumption will not take the consideration for the national income. So the goods which are ready to consumption is known as the final goods. That final goods value only will be take the consideration in the national income. And also the value of the services, whatever the services are having the value only will be considered in the national income. So that means if any services are not having the value, that means if any services are providing with free of cost, that services may not be considered in the national income. So the value of the goods and services only will be considered in the national income. So that goods and services are produced by one country people is known as the national income. Again, here we have to understand one more important point, that so the goods and services value will be considered as national income, that we know. But that goods and services produced by one country people, that is very important. So that means, so let's take for example, if American came to India and working in India, producing goods in India, but whatever the goods produced by the foreigners like our American or any other country, that people production, that is goods or services, may have the value, but that goods will not be considered in the national income because that goods are not produced by our nation. Our nation means our country people. So that point we have to remember when you are talking about the national income. And another point is, suppose if any Indian, if any people belongs to our country is working in the foreign, maybe America or England, Japan or some other countries. Okay, that people, whatever the goods are producing, whatever the services are producing, that goods and services value are going to be included in Indian national income, because they are belongs to our country. They may not working in India, they may not working in our boundary, but the people belongs to our people, the people belongs to our country. So that's why the country people production will be considered as one country national income. That is one very important point what we have to remember. So these are the some important points we have to consider when we are talking about the national income. The value of goods and services only will be considered, and final goods only will be considered, one country people production only will be considered, the goods and services produced within the financial year will be considered as national income. So that means so here some more points we have to keep in our mind when we are talking about the national income. That is, if any goods may have the value but they are the second hand commodities, that goods are not going to be included in the national income, because already that goods were included in the national income when they were manufactured. So again, when the people are selling or buying second time, which is called second hand commodity, so that goods will not be considered in the national income. And if any services are providing but not having the value, that goods and services are not going to be included in the national income. For example, air. Air is one of the most important commodity. You know, without air we cannot live in even 1 minute also. So here there is a more utility, more use from the air, but there is no value for the air. We are taking the air, are we paying anything? We are not all paying any price. So since there is no price, there is no value for the air, air is maybe commodity, air is maybe in the use, utility, but that is not included in the national income. That point you please remember. And one more most popular example is housewife services. Okay, housewife may be providing lot of services to her family, but she is providing services to her family, but she is not taking single paisa from the family. That means she is providing free of services to her family. Since she is providing her services with free of cost to her family, her services will be considered as free services. So in economic terminology, we can say that there is no value for her services. Since there is no value, value means here price. Since there is no price, our services will not be included in the national income. So these are the some important points we have to remember when you are talking about the national income. At the same time, when we are talking about this national income, there are a lot of components are regarding the national income. That components we have to discuss when we are talking about the national income. Okay, particularly one of the most important topic when you are talking about the national income is depreciation. Okay, depreciation. So this point is very important, because when I given the definition for the national income, I told you that value of the production. What value I told you? Net value. I given the net value. Okay, gross value and net value. These are the two important things we have actually. Gross value means the total value, total price of the commodity. But net value nothing but the remaining value from the gross value. If we subtracted the depreciation, then only we will get the net value. That net value will be considered as the national income, not the gross value. So here net value is called national income. Net value equal to what I told you? Gross value minus depreciation. What is the gross value? Total value of the production is called gross value. So from the gross value, if we subtracted the depreciation only, we will get the net value. So then we have to discuss about the depreciation. What is the meaning of the depreciation? Here depreciation is the gradual decrease in the economic value of the capital stock actually. Okay, it is the diminishing value of the capital stock. When we are using the capital stock in the production process, that is machinery, equipment, this may be considered as a capital stock. So when machinery, equipment we are using in the production process more than one time, that value are going to decrease gradually. That decreased value is known as depreciation. Okay, net value means without depreciation. So nothing but net value means after subtract the depreciation, remaining value will be considered as a net value. So that's why net value, that is remaining value, will be called national income. So this depreciation is also known as capital consumption. So because depreciation is nothing but decreased value from the capital stock. That is, whatever the things we consumed from the capital stock or machinery, that is called capital consumption. Particularly in the capital we have the fixed capital. So that's why it is also known as fixed capital consumption. So depreciation also known as capital consumption. It is also known as fixed capital consumption, we can say. So that is one more important when we are talking about the national income. And one more point here, when we are talking about the national income, there are two things are very important. One is factor cost and another one is market price. Generally, the factor cost national income will be mainly considered for any analysis. Okay, of course, so there is one more concept also when there, that is called market price national income. Here we will try to differentiate the difference between factor cost national income and market price national income. So here, what is factor cost national income? Factor cost is the cost of sum of factor prices. What are the factors of production? We know that labor, land, labor, capital, organization are called factors of production. Factors of production, because national income is nothing but value of the production. What are the factors of production? Those the factors are using for the production is known as the factors of production. For any production, we are using land, labor, capital and organization as a factors of production. But when we are using these factors of production in the national income, definitely we have to pay return. Definitely we have to pay the return. Without paying the return, no factors of production will not come. So that's why if we want to use any factors of production in the national income or for the production, definitely they have to use for that purpose. We have to pay something that is known as factors of payment. That payment is known as factor cost. Like the rent is for the land, wages is for the labor, interest for the capital and profit for the entrepreneur, organization. So that's why rent, wages, interest and profit, these four are called factor cost. The sum of these four is known as the national income. Okay, it is equal to production cost. Already I told you, because the factors nothing but the factors which are using for the production. Whatever the payment we are paying for the factors is known as a factor cost. That's why it is equal to what is called production cost. So in this production cost, nothing but factor cost, the subsidies may be included, but indirect taxes were not included. Please remember, indirect tax, what known as the production taxes. The production tax or indirect taxes were not included in this factor cost, but the subsidies will be included. That's why factor cost is equal to minus indirect tax plus subsidies. Plus means included, minus nothing but not included. So indirect taxes were not there in the factor cost, whereas the subsidies were included in the what is called factor cost. At the same time, when you are talking about the factor cost in the parallel, in the similar way, we have also one more concept called market price. So, the market price nothing but the price which is paid by the consumer in the market when the consumer is purchasing the commodities. Okay, all the consumers, if they want to consume the commodities, they want to purchase the goods, no? If they want to purchase the commodities, they have to go to the market to purchase the goods. When he went to the market to purchase the goods, he has to pay some amount to purchase the goods. Whatever the amount he is paying to the seller is known as the market price. See, production cost is different from the what is called factor cost, market price, because production cost is nothing but only production cost, the factor cost, so which is only the amount what the required for the producer. But here after producer, suppose I am the producer, I produced one commodity, take for example fan. To produce the fan, I invested around 2000 rupees. So how much amount I want? I want 2000 including profit. I am expecting some profit. Including profit, I want 2000 rupees. Okay, so I want 2000 rupees, which is equal to rent, wages, interest and also profit. Even I am also taking the profit within the 2000 rupees. That is amount I want. But when I am selling that fan in the market, immediately government will involve. What the government will involve? Government will impose some taxes, maybe called GST, maybe called sales tax once upon a time. Okay, maybe called excise tax. So some type of taxes will impose by the government, not by the seller. Seller don't want that amount. Seller want only 2000 rupees. But on the 2000, government imposed maybe 18% or 28% or 5%, something, some amount, some percentage of the amount imposed by the government as a GST or taxes, which is known as indirect taxes or production taxes. That amount has to go to the government. So I want 2000 rupees. On that, suppose the government imposed 20% GST, let's say example. 20% nothing but 20% on 2000 nothing but approximately 400 rupees. Okay, that 400 rupees has to go to the government, not for me. So that means how much I have to collect from the consumer? 2400 rupees. Actually, my production cost is only 2000, but remaining 400 I have to give to the government. So that's why from the consumer I am collecting 2400. Out of this 2400, 400 giving to the government, remaining 2000 I am taking. Production cost I am taken, the remaining indirect taxes taken to the government. So the consumer is paying 2400, but I am decided only 2000. My price is 2000, but consumer is paying 2400. So that is the difference between production factor cost and market price, please remember. So the market price means including taxes. Okay, if you see any commodity on the sale, there will be MRP. MRP some amount, for example 20 rupees. In the bracket what we can see? Inclusive of all type of taxes. Okay, so MRP nothing but including tax. But the subsidies will not be there, because subsidies will not be the consumer. Subsidies will not be the consumer. Behalf of the consumer, government may be paying, but not consumer. So that's why in the market price, indirect taxes will be included, whereas subsidies will not be included. That's why market price is equal to plus indirect tax, what is called minus subsidies. So these are the differences between factor cost and market prices. In the factor cost, there will not be indirect taxes where subsidies were included. But in the market price, indirect taxes will be included, but subsidies will not be there. Not there means minus, will be there means plus. So that is the difference between these two. Okay. So at the same time, along with these components, there are some other important components we have in the national income. These are the things like gross domestic product, which is called GDP, gross national product, which is known as GNP, net domestic product, which is called NDP, net national product, which is equal to NNP, personal income, disposable income, and per capita income. So all these 7 are called some other important components of the national income. So here, what is GDP? Okay, what is the gross domestic product? Gross, see, since all these are related to components of the national income, all are related to one particular period of time. What is one particular period of time? 1 year. That is financial year. Year means not from January to December. Please remember, financial year I am saying. Financial year means April 1st to March 31st. This 12 months is considered as 1 year. Okay. So, but not January to December. Please keep in your mind. So, because of agriculture production, our financial year was decided from April to March, not from the January to December. So, in that financial year, the total value of final goods and services produced within the boundary of the country is known as GDP. All things already we discussed. We know one particular period of time. We know final goods and services. We know the value of the goods and services, but here the new point was there, that is goods and services produced within the boundary of the country. When we talked about the national income, boundary is not a criteria, people is a criteria. The person who is working is important, but where he is working is not important. Okay. So, even though the foreigners are working within the country, that may not be included in the national income. But whereas here, when we are talking about the GDP, the goods and services which are produced by the people within the boundary of the country, the place is very important. Person is not important. Please remember. That means if in our boundary, if any people, that person maybe belongs to our country or other country. If the person is producing goods and services within our boundary, automatically that commodities are going to be, the value of that commodities are going to be included in the GDP. That means in GDP, foreigners' income also included. But whereas in the national income, foreigners' income is not included. In the GDP, Indians who are working in the foreign income is not included in the GDP, because they may be Indians, but they are not working in our boundary. That is very important. So, the GDP is going to be explaining in the name of C plus I plus G, whereas C is equal to consumption expenditure, whereas I is equal to investment expenditure, whereas G is equal to government expenditure. Okay, GDP also are going to be discussing the factor cost and market price. Already we discussed what is the market price, factor cost, market price variation. Already we discussed what is the factor cost. Factor cost is without indirect taxes with subsidies. If it is market price, it is called with indirect taxes without subsidies. At the same time, it may be national income or GDP, all these components are also going to be discussed with base year and current year. Current year means same year. Base year means the government will select 1 year to estimate the national income. If any goods and services value means price will be considered of that selected year is called base year. Present our base year is 2011-12. Please remember. All these calculations, base year are going to be calculated with 2011 and year. Production may be for this year, but value means price we are taking for 2011-12, not for this year. Okay, if we consider national income or GDP with base year is called real income, real GDP, real national income. If we are taking the consideration value, that is price of current year, that is same year, will be considered as a nominal GDP or nominal national income, what we can say. Okay, at the same time we have one more thing, GNP, gross national product. In the gross national product we have, see, in particular period of time, the total value of final goods and services produced by one country people is known as GNP again. Here again one country people. So, one country people means foreigners' income is not included here, whereas Indians who are working in the foreign will be included here. That is the differences between GNP and GDP. In the GDP, foreigners' income were included, but in the GNP and national income, foreigners' income were not included. It is a gross value. Okay, these are going to be considered as GNP is equal to C plus I plus G plus R minus P. We know already C plus I plus G nothing but GDP, already we discussed. Okay, so GNP nothing but GDP plus R minus P. What is R here? Receipt from other countries. And P means payment to other countries. Minus means we are paying to other countries. Because in the GDP, foreigners' income will be included, but GNP should not be included. That's why we are going to be minus. In the GDP, the Indians who are working in the foreign is not included, That's why that should be received. That's why plus R. Okay, R minus P are going to be included. R minus P also known as net income from abroad. Okay, net income from abroad we can say. That is the difference between GNP. Okay, so this is also we are going to be discuss factor cost and market price. Factor cost nothing but without tax with subsidies. Market price nothing but with tax without subsidy. Real nothing but base year income. So nominal means what is called current year income. Okay, these are the things already we discussed. Okay, one more is net domestic product. Domestic nothing but boundary, within the boundary, GDP. Okay, from that GDP, if we subtracted the depreciation, we will get the net value. So that's why the NDP nothing but GDP minus depreciation. GDP is a gross value. From that, if we subtracted the depreciation, automatically we will get the net value, that is called NDP. Okay, like that we have another thing called NNP. NNP, it is a net value, national product. National product nothing but one country people. One country people means the foreigners' income is not included here. And Indians who are working in the foreign will be included here. So that's why from the GNP, if we subtracted the depreciation, automatically we will get the GNP. So the GNP is always equal to national income, what we can say. Okay, here this is the thing. Personal income nothing but if we subtracted corporate taxes from the national income, undistributed profit from the national income, social security contribution from the national income, and by adding the transfer of payment to the national income, we will get the personal income. And disposable income is one of the thing. If we subtracted the personal taxes from the personal income, we will get the disposable income. This disposable income is also known as consumption plus saving. So this is the amount ready for the spending is called actually disposable income, which is called demand, actually aggregate demand, the amount which is ready for the purchasing goods and services. And the last thing in this component is called per capita income. Per capita income is nothing but average income. The average income of one country people is known as the national per capita income. We will get the per capita income by dividing the national income with of that particular country people, that is population, is called per capita income. So these are the some important components of the national income. Thank you.